Welcome to another episode of Beating Alpha. This is episode 73, and I'm very excited for this podcast show because, again, I have a very special guest on. This looks like it's going to be a lot of fun and a lot of great insights into multifamily investing, syndication, construction, development, and what it takes to, build those passive income streams, and a lot of great topics that we're going to cover today. So here in front of you, you're going to see Andrew Schena. So he's an accomplished real estate developer, syndicator, sponsor, investment operator, and a business owner with over 36 million of development experience owning, 36 million of development experience owning and operating over 5 million in cash flow multifamily and having raised over 9 million of private investment capital. Andrew is consistently sought out not only as a partner, consultant, coach, and advisor, but as a steward of investor capital. Andrew is passionate about real estate, personal and professional growth, financial education, mindset, and his family. Again, you can check him out on Instagram, Andrew Schena, and LinkedIn as well, Facebook. So Facebook is Capital Equity Partners. Of course, those links you can find down below as well. But again, as I said before, prior to the interview, it's a great pleasure to be connecting with you, Andrew, today.
No, honestly, Martinez, thank you so much. It's an honor to be on your show and to have an opportunity to speak to your audience. And as we were just kind of mentioning before, anything that I can anything we talk about that might be able to help somebody in their path, I'm incredibly grateful for the opportunity to do that. So thank you.
Oh, it's a pleasure. It's a pleasure. Again, I love having, people just like yourself on again, because you have a lot of experience and, it speaks a lot to me and again to the audience, like 36 million of development experience, $36 million again of real estate experience. But I would like to kind of start off like the journey, the beginnings. I know everybody has a different story, and I'm sure you have a great story as well. So I'd like to kind of talk about your story, your entry point into real estate investing, and how did it started for you?
Yeah, sure, absolutely. I can be long-winded, so I'll try and tell a somewhat short version of the story. So I started out in the mortgage business back in 2001 after I had originally worked at ESPN coming out of college. I went to school for broadcast journalism, worked there for about a year, realized it wasn't the path that I wanted. And I read the famous purple book, Rich Dad, Poor Dad. And that was really the first thing that really started setting me on my path to understanding kind of cash flow and financial freedom and really financial education. So after kind of bouncing around to a couple of different jobs in my early 20s, I landed in the mortgage business as a mortgage broker. And from there, I really got my true financial education, income, assets, liabilities, credit. And I ended up working with a number of different real estate investors that just owned, small 2 to 4 unit buildings, nothing large, but, some had, more than a few. So understanding how the cash flow process worked, that was my first entry into understanding the financial side of it and piqued my curiosity. By 2008, I got my salesperson's license as a real estate agent to better start understanding the asset side of the equation and really understanding what features and what construction types or different components of a property and what's important within a building process. And I also grew up in the trades. My dad was an electrician, and so I always spent summers generally working with him on job sites and helping him run wire and install things. So I was always around construction growing up. So it was a little bit in my blood. So by 2009, 2008, 2009, I started investing into my education and attending RIAs and real estate investment associations locally, just to understand the investment world a little bit more. I didn't get my salesperson's license to help Mr. and Mrs. Smith find a home. I did it to be able to understand cash flowing assets and real estate from a construction perspective a little bit more. instead of just the brief exposure I had as a teenager. So the next step was, so the downturn came and the mortgage business was difficult. But by about 2010, I started getting the itch again and started reviewing a lot of the information that I had learned through the RIA process, and started my education, my own personal education, and invested in a course and began studying that course and the systems and procedures that led me into, and my business partner into, development. And that was 2011. So we began with just flipping kind of some single families. And then, well, actually we started out, our first project was a 3-family, and we started getting into raising additional capital for other properties before we really even knew what syndication really was. So my education from like 2012 and 13 through today has included like full syndication training, actually, taking another step. So building some cash flow, or building up some cash flow properties, continuing to do, going from just general cosmetic flips to ground up construction, and then really parlaying all of that experience into larger commercial sized multifamily assets, which we have recently got into in the last couple of years. And that kind of brings us to today. So we still do a little bit of development, looking for different types of opportunities locally here in Boston. It's tough to find some really solid cash flowing opportunities here in Boston, but because it's more of an appreciation market. Mm-hmm. But we're still looking at cash flowing commercial assets out in commercial multifamily out in the Midwest and the Southeast, and just kind of monitoring those markets right now, figuring out where we want to strike and what we want to do next.
Awesome. So again, great story, but I have so many questions. But yeah, I would like to ask that first question, which is, you started your education 2008 and 9, kind of the worst time to be in a real estate industry. So why did you start it at that time?
So when I began attending RIAs, one of the first things I learned from networking there and talking to other individuals and other investors was that in real estate investing, you can make good money you can make money in down markets as well as up markets. So, but you just have to understand the market. And that's when the foreclosure boom was really happening. So there were a lot of people there to learn about foreclosure. So, I began to learn about the process, and having the experience on the finance side, I kind of understood, that side of it, and the things that, revolve around the foreclosure process. So understanding the foreclosure process locally, and then understanding, okay, well, I need to know how to market to these people, and understand how do you help these individuals that are going through this process avoid foreclosure, because that's the ultimate goal, and try to save equity they may have in their house, and just understanding the full breadth of their situation. So that was 2008, 2009. That was the height of it. So, or the height of it. It was really the beginning of it. And that was why I decided to start getting my education at that point, because it was something I inherently knew about, because my world of mortgage finance and getting my real estate license kind of coincided, and they all kind of came together. So it allowed me to be able to help others that might be in a situation that they didn't like to be in, or they were in a foreclosure situation. I wouldn't say they like to be in. I don't think anybody enjoys being in that situation, but being able to have the education to help somebody maneuver a kind of a situation like that was beneficial. I'm always looking to I'm never out to try and pirate property. I'm always out to try and help a situation. How can I help somebody alleviate an issue, and then figure out, okay, can I profit off of this as well, by doing good by others. So that was the beginning.
Awesome. So talking about the real estate development experience, which is you managed $36 million worth of the project. So where did that start in your life at that point?
So that started in 2011, and we started with one small 3-family in South Boston, Massachusetts, which is where our office is located. And from there, over the years, we just began to take on larger and more difficult projects. And it was one of the things.
Sorry, can I ask you what type of projects you're talking about more difficult? So what those projects?
Sure. So when I say more difficult projects, I say like going in and just doing a cosmetic renovation of let's say a single family. It's from a construction perspective or a flip perspective, it's pretty easy. If you're not moving plumbing, you're not moving electrical, you're not moving walls, and you're just replacing cabinets and countertops and tile and maybe replacing a fixture here and there. I mean, that's as basic as any type of renovation generally gets. It's referred to more as a cosmetic rehabilitation or a cosmetic rehab. We call them fluff and buffs. So, when you start getting into full gut renovations where you are, ripping apart everything and leaving a 4-wall shell and a roof structure, that is where we started going down that path. And then we started doing projects where, you were digging out basements and with the full gut, you're reconfiguring floor plans of individual units within a 3-family. And the 3-family is just a triple stacked floor plate residential property. Very common here in the Boston market. And then we started getting into, doing additions. So we started kind of playing with properties where we could, we're actually going to start doing foundations. And in all of these projects, we began like with a quick little fluff and buff or cosmetic job. You don't need any architectural or engineering for the most part to go into those. So when you start getting into full gut renovations or doing additions, and then we start doing ground up projects, you start becoming familiar with the engineering trades that you need in order to accomplish your goal. So architectural engineering, structural engineering, those are the two main ones. And then then you start getting into civil design and civil engineering when you start needing, you're doing ground up projects with certified plot plans and utilities, because you're going to tap into or replace plumbing lines and sewer lines and putting in sprinkler, like direct sprinkler access for fire suppression, sprinkler systems within a building. So once you begin, and Caltech systems, or what people refer to as recharging systems, groundwater recharging systems. So these are all the things as you begin to get larger in scale and get more involved or deeper into projects are the educational hurdles that you begin to just start to have to overcome. And that's from a project side, from the actual construction side. But more importantly, we began to really truly understand the zoning process within the city of Boston, which is, trying to either expand a footprint or to build something that may be larger within a different type of multifamily zone. So really trying to do more complex jobs and understanding the neighborhood and the community process and the zoning process and how that works, and working with the community and working within those guidelines and doing traffic, doing traffic plans and for the transportation department and the DPW and they call them traffic mitigation plans and things like that, to actually understand it's not just you're not just doing a kitchen and a bathroom, you're literally affecting a neighborhood. So you have to be able to route traffic around and pedestrians around safely around a project. So those are the things that, as when I had said from 2013 on, are the things that we really started getting an education on and started to work with. So the larger and the more complex and difficult projects that you do, it's not just the aspect of the construction, but it's all of the ancillary engineering and associations and government government departments you need to be able to work in and out of and do it effectively, because it all takes time, and time is money when you come to developing real estate.
Yeah, exactly. So again, talking about your development experience, what do you consider your own biggest project that you accomplished, in that time?
So the biggest project we've done to date is, I can talk about multiple projects going on at one time, but I mean, the largest single asset we've ever built ground up is a 4-unit building. It's a 5,700 square foot building. I mean, the two of the units were pretty sizable. If we would love to have cut it up into 6 units, but it ended up being two big units and two good, average size units here in South Boston. But at that time, we also, while building that, we also had an additional 5 or 6 units, excuse me, I believe it was 5 units in different parts of the city as well, kind of in similar process. So there were 2 ground up buildings going on at the same time, and one was another partial renovation. So, it seems like there was a lot going on at one period, and it's intensive when you're in the thick of it. So, but yeah, the largest asset we've ever built was 4 units, and we still are unfortunately holding on to 2 of those units right now. Actually, one of them is about to go into contract, but that's a coronavirus story for another day.
Okay, got it. So again, the question is for you. I think people would have that question because it came up in my head also. Because you said you doing these kind of extremely, extreme flippings, as I would call, like just gutting everything in the house and kind of leaving the walls and the roof. That's all you do. So where do you actually make those decisions? Like, should I start from the ground up and kind of build from scratch, or should we gut it and just keep the walls and the roof like?
Yeah, it's a great question. And I mean, the safe answer, or the safe play, is to say, look, educate yourself, right? Either look into, listen to podcasts like this one, go to different types of real estate investment associations and network with like-minded individuals. And if you want to, invest in some courses and invest into different types of platforms that will help teach you specific things that you want. Do a lot of reading. But eventually all of that has to lead to taking action. Sooner or later, like, you can only read and study so much, and then you just got to take action and do it. And that's probably one of the best ways that I always learn. Like, I'm not afraid to fail because I look at failure as being an opportunity to see what I did wrong and what should have been done, and figure out the right way to do things. So I don't get down on myself if I fail about something. I look at it as it's not that I'm happy about it, but it's exciting because it's like, okay, we just learned something. So now how do we use that and apply that moving forward? So, and we've done that year over year as we continue to kind of scale up our business and the types of things that we do. So, studying, reading, and then taking action. So if you feel more comfortable with going in and just understanding how to do a kitchen and a bathroom, then start with something light like that just needs, the property is in good shape, and you can just go in and do some painting and maybe replace a couple of windows and do a kitchen and a bath, and you're done. Then great. When you start finding properties that need a lot more work, and you'll know them when you see them, that involve, the building envelope with siding and roofing and insulation, or if it needs, you need to move walls or gut something and just demo the whole place out. Our first project was a full gut 3-family. So we didn't take the easy route first. And at the end of the day, we got in, our first project was taking I want to say it was about it was a smaller 3-family. I want to say it was maybe 28 to 3,200 square feet. And we ripped it down to the studs. And I remember walking through the building when it was a shell and just open, and being like kind of in amazement, being like, oh my God, what did we just get into here? And, but it was, I mean, at the end of the day, it's a learning process. And to a degree, I'm happier we went in that direction, just due to the fact that we ripped the Band-Aid off. We weren't going to tiptoe into the water. We're just going to jump right in and get our hands dirty and understand what things are. And at the end of the day, you're going to lean on your contractor partners and professionals that are around, your architects. You lean on these people and ask questions. I've never been afraid to ask questions. And it's funny, one good general contractor told me one day when I was asking him questions, like, well, why do you do this? And how does this work? And it's funny, he looked at me, he goes, I was told a long time ago, he's like, never educate the person you're working for too much, because Next thing you know, they're going to create their own general contracting company. Sure enough, a couple of years later, we started our own general contracting company. So, you just get comfortable in the process and comfortable with understanding what you're looking at, and being able to, and when you're doing larger projects, being able to read a set of blueprints and understand, especially when you get into larger projects, everything's called out for you. The engineers call everything out. They design everything. So it's actually pretty easy. The smaller things can be more difficult because you're kind of learning on the fly and you're learning by doing. Whereas on much larger projects, I mean, even in the 4-unit building, they treated it more like a commercial building where, they give you, the blueprints, and the blueprints have everything you need to do on them. Just read them. And if you have questions, ask the engineering professional. It's what you're paying them for. And then you can pretty much share that with your contractors, the plans with your contractors, and you have a discussion about their scope of work and what they're doing and what they may see as issues on blueprints before you physically get into the field. So that's why, sometimes you will hear that larger projects can be easier. And in some respects, that's right. They can, from financing and raising capital to the actual construction and the process of the construction, because it's all done on paper prior to actually doing it in the field. Whereas a single family, a 2 or 3 family, you may have a set of engineering prints, but it's just a set of engineering prints and floor plans and verticals that, just show the pictures of the property. It's not necessarily calling out the materials or calling out different specs that need to be done within one individual contractor's role. So that's where we ended up learning on the fly, was just in that middle ground between single families and 3 families, and just doing a lot of them and understanding we had our business systems in place. And like I said before, if we failed at something, we'd turn around, we'd look at what we did and try to improve that and that process moving forward. So that's just generally what we've done over the last, for the most part, in the development side of things, 9 years.
That is awesome. I mean, I love that you guys manage all these projects. And again, as you said in the beginning, it comes down to the education. And, if you want to flip a house, maybe it's going to require you a smaller team, a smaller, capital investment, into the property, which is like when you started throwing the ground up, you're talking about, architectures, contractors, like the labor, like there's a lot of moving pieces that are involved in that. But as you said, it's not that difficult. You just read the blueprint, but still, if the person doesn't have an experience in the game, which again, as you said, there's a lot of different pieces when it comes to zoning. So it can be a little bit tricky, in the beginning.
Absolutely.
Yeah.
Absolutely. And it's overwhelming. Trust me, I've had plenty of sleepless nights. I've been completely overwhelmed at times, sometimes, staring at the ceiling, trying to figure out what my next move is going to be. But, at the end of the day, you 1 foot forward every single day and just keep pushing. And, and you realize you'll be able to turn around and say, holy crap, I scaled that mountain. Okay, that's great. I got over that. So let's go on to the next challenge, because every day is going to be a challenge in the development business.
So, if we talk about the challenges, how do you overcome those moments when, again, you're facing this roadblock, ahead of you, and it's like, oh my God, it's going to be a problem? Because a lot of people choose to quit or change the direction, they do a lot of different things, but they don't finish the project. Yep. But you do somehow overcome these, problems that you're going to be facing. So how did you get in that zone, the mindset? Like, I know you mentioned the books, but how you can, just go through the wall and just make it happen.
So I think it's a great question too, because that side of, I think all of us, every individual, it has to come from personal development. I think there are 2 aspects to any business. There's the actual business itself, and then there's you, right? There's you battling your mental capacities, you battling your own emotions on a daily basis. If you don't have self-realization or and you don't self-analyze yourself or what's going on in your own head or what's making you think a particular way, like let's say the people around you, or if they're negative or they're doubting you, where they say, what are you going to get into real estate investing for? You're crazy. You're going to lose all your money. Well, you start listening to those voices, you'll never do anything. So through any type of challenge, I mean, I'm a big proponent of just reading and meditating and prayer, like my spirituality, things like that. Um, it's just something I've gotten into a habit and of doing. And it's something I generally try to do 4 or 5 days a week. And um, meditation just helps you kind of just center and remember what's important in your life instead of getting so hung up emotionally on issues and items that may be difficult at work. So being able to become centered and understand where you are in your world and within your life, and all you're doing is looking at problems and saying, well, it's not that big of a deal. Just find the solution and deal with the results and move forward with it. It is what it is. Sometimes you're going to win, sometimes you're going to lose, and it's okay. Obviously, you continue to push for what you want, but if you don't always get what you want, sometimes you just get what you need, and you make a decision based on that and move forward. Don't dwell on it. Just move forward and say, look, that stinks, and that's unfair, and I don't like that. But you know what? I'm going to learn from it, and I'm going to move forward. And that's generally how I approach almost everything. And I try to keep a pretty upbeat mentality about things. I try to look for the silver lining in things. And I think that's just my personality and the way I kind of process my world and the decisions that I need to make.
I think it's a very healthy thinking. The way you look at the problems, even though sometimes it looks like as a problem, you still can find some positive things that you can take away from that. Instead of looking for these, oh my God, like it's so negative. If you're going to look for more negative, the more negative you're going to find, and it's going to be harder and harder for you to, break through those barriers, going ahead. But,
there's a famous individual, a very famous motivational guy out there that is probably one of the best. And Tony Robbins always says, I enjoy listening to his things and whatnot, because it helps me understand my own personal world better, which can help me if my personal world is solid and on track, then all the other worlds that I have to touch around me within my days, I can affect that in the same positive way. But he always says, life isn't always happening to you, it's happening for you. So understand that the problems can be gifts, and understand what are the positives you can take out of problems to either help better yourself or better someone else's situation. Or, either it may not be that exact situation, but it could be your situation, could be 6 months, a year from then, where the same thing pops up and you may know how to deal with it that much better.
Yeah, I mean, it's very important. Like that's what I love. That's what I wanted to ask you the question about, breaking through those barriers, because a lot of people don't mention, like the mindset piece, which is, it's the most important thing in a business, in any business.
Absolutely.
Because 80% is the psychology and 20% is mechanics, right? So like the way you think and the way you approach things, situations, the way you react. And again, talking about the Tony Robbins, I would recommend for people, if you want to go and explore a little bit more in depth about Tony Robbins, because he used to study, one of his mentors used to be a guy actually two guys called John Grinder and Richard Bandler. And some of you who are watching this and maybe heard these names, these are the people who were kind of the pioneers in the NLP, which is neuro linguistic programming, is basically how do you decision making, all that process. If you're watching this, you never heard that, I definitely recommend to go and check out some books. But it's a big piece. Mindset is everything.
And I could agree more with you. And I even said to my wife, I'm like, I wish because I'd heard of him. I just never had read anything or listened to anything that he had ever talked about. And a good friend of mine actually asked me, he's like, oh, have you ever listened to Tony Robbins or anything like that? I'm like, no, actually, no, never. And he's like, well, he said, sending me some things on him and some YouTube just clips and about things he talks about, not of him individually, but just him in his talks or either in his seminars or something like that. And a lot of the stuff just started clicking. And so as things clicked, I was like, that kind of makes sense. I just said to my wife, even like not 2 weeks ago, I'm like, I wish I started kind of reading or learning more about his message and what he talks about 20 years ago. It's just made such an overall impact on my own personal life and how I view and handle things that it's, it's incredibly beneficial. But I'm grateful for the fact that I learned of him, a couple of years ago rather than, instead of 10 years from now. So, but and your mindset's huge.
And I love the fact that you're, again, by the way, it sounds like, and it seems like it, you're a big proponent of kind of going out there and educating in yourself first. And that's
Absolutely.
exactly what you did, like 2008, 2009, then 11 and 12. And then you started investing. So you
Yes,
invested in yourself first before you started investing in real estate,
always.
which again, a lot of people looking from the opposite spectrum, they're like, oh, I have to buy the property. They don't know the how to, they don't have
Yeah,
the mindset for that. So that's a big piece. Thank you for sharing.
agreed. Absolutely.
So talking about the multifamily, where did
Mhm.
that came about, and how
So
long ago?
great question. So by about 2016, we had started having great success with the development projects, and I looked at it and said, well, I understand that markets go in cycles. So sooner or later, the music will stop. And in the development business, when the music stops, you can get hurt pretty bad. So I started looking at it and saying to myself, okay, excuse me, we're going to need to understand and have more cash flow in the future. So as markets adjust, well, people are always going to need a place to live. So we need to kind of position our model into a cash flow one as well. So about that time is really what started me on my journey of understanding, or I knew about cash flow, but understanding more of the mechanics of multifamily. So I rinse, wash, repeat. I literally invested into another program from somebody who has done it and done it incredibly successfully. Invested into that, got a little coaching, and studied and did all the things I needed to do. And within a year and a half, we owned our first 28 unit complex out in the Louisville, Kentucky MSA, Metropolitan Statistical Area. So we're actually in southern Indiana, but we're about 10 minutes north of Louisville, downtown Louisville. So it's, and that property is doing great. So, it went from reading a couple of books to finding a program that I wanted to invest and learn from, then going through the educational process, and then taking the steps and learning and learning as I went on how to build those relationships in a different market, that rather than just home. And there were certain things that I was looking for in order to achieve in the multifamily space. So that's why I went to another market for yield, number one, because in Boston, you don't find a ton of yield. But um, number two was just, understanding like you said, the mechanics. So it was understanding that 20% and learning that 20% of mechanics in order to be successful in that space. So it took us about a year, a little over a year to find that first property. And we've held it now for 2 years and it's going fantastic. And, we didn't want to just jump in and go out and buy another property right away. We wanted to manage it and understand the ebbs and flows over a year or so before we went out and actually bought our second property. So now we're actually really starting to ramp up efforts to look at a second property in the Louisville market. We've been down into the Tampa market and looking at properties down in the Tampa St. Pete area as well, following migration patterns and economies and local economies and what's really happening. But again, it was the same process that started in 2008. And by 2011, we were opening our doors. And now 2016 is I started that process again, just on the multifamily side, while also doing the development side and executing those projects and those investments. And by 2018, we in 2 years we had our first property, and we've been looking and doing different things since then. So kind of just understanding the ebbs and flows.
Yeah, I love it. So can you talk about a little bit more in detail? What did it take for you to find that 28 unit multifamily deal, physically? Like, what did you do to
Yeah,
make it
it's
happen?
a great question, right? Because considering it's about 1,800 miles away from here. Um, First steps is actually identifying markets and identifying, one of the criteria that we use is, we look for an emerging market, and an emerging market definition to us is 2% job growth, 2% population growth, and 2% household formation. So once you have those statistics set, and you look at that over, the 2 to 3 year period, in front of that. So what that's showing is as population growth or as job growth is happening, population growth follows job growth. And for every one job that's announced by a company, there are typically 4 ancillary jobs that surround that one job, that job notification. And it starts with the construction. Let's say it's someone like GE's moving all these jobs to Boston. Well, it's going to start with construction jobs, and then could be local jobs for the local economy or people that may be moving with that company. But even more so, all those jobs are going to support, you're going to need the dry cleaner and the restaurant and the other service providers to that potential corporation. So it's as job announcements happen, it's a ripple effect. So population growth follows job growth. And then household formation, once you have enough people in a certain area, people start meeting each other, and then all of a sudden they boyfriend, girlfriend, husband, wife, they start families, and all these people need places to live. So those types of statistical data, are what you look at for 2-bed and 3-bed apartments and complexes, and where are people commuting to, where are these companies located, how long does it take for people to get there. So you start looking at density, and you start really kind of peeling into neighborhoods and traffic flows and where people are living, and you understand where the fringe is, and you look for the path of progress. And what you do is you try to find assets and that are within that path of progress, and you just let the path of progress run you over, and as it goes out beyond your property, because you're improving your property, and then you're getting better quality tenants to your property, and then your commercial, any type of commercial property is valued on the stream of income that it throws off. So the more you can increase your rents, the more valuable your property is. So as that path of progress expands out to you and past you, then things around you start changing, and everything, the quality of everything starts changing around you. And again, with your own building, you start attracting better quality tenants and improving the value of your building. So that was step 1. Step 2 is then, once we identified the areas we wanted to be in, is just cold calling all the brokers in the market and introducing yourself and telling them what you're looking for. And that takes a while to develop relationships. I'd say 80 to 90% of the asset deal flow runs through the broker community. And so you need to develop strong relationships with the brokers in that area, because they're the ones who pretty much understand and move markets. So developing relationships takes a while. You're not just going to get a screaming deal right off the bat. You have to develop relationships, and they're going to test you in the beginning. They're going to want to know what your criteria is. And they're going to send you probably, not always, but they may send you crap in the beginning, just to test you, to see if what you like and what you don't like, and if you truly know what you're looking at. How good your education, or are you just someone else that's coming out of a seminar, calling them, telling them they want 150 units and B-class locations, B and A locations that are in C condition, like the worst property on the block. They probably get 100 of those calls a week. So it takes a while to just really establish yourself and develop not only your personal relationship, but educating them that you do know what you're talking about and that you do have the ability to close. So a lot of those brokers, they don't want you to come in and say, yeah, I want a 100-unit building. And they ask you, well, how many units do you own right now? And you say none. They're just going to be like, okay, yep, here's another one. So our approach was like, look, of course we love the 100 to 200 unit buildings, but we know we're not there yet. We're starting out. Like, show us the mom and pops. Show us the 20 to 50, 75 unit buildings, because there's not a lot of focus that are on those buildings when you start getting into other markets. Everybody is in there, and you're competing with family offices and institutional when you certainly get up into a certain price point, but efficiencies of scale really are reached by about 150 units. So anything from 150 units to 300, 400 units, that there are wagons of operations that are much bigger, stronger, and efficient than you are, reviewing and analyzing those properties. That's not to say that you can't get your hands on them, but in order to actually close, you have to have the right team around you. So if you have the right team around you, and you can you can, take on those types of deals and go for it. But if it's just you and a couple of other people that are also trying to break into that business, or maybe somebody has a little bit more experience, then that's where you got to shop, and you got to cut your teeth before you can grow. Same thing when we did, with the development side. We started with, I mean, granted, we did start with a giant, gut renovation, but then a couple of projects after that were small single families, just small cosmetic renovations. And then we came back to the multifamilies because we realized we didn't want to be in the single family space. So you just got to jump in at some point. And when a lot of deals are curated or controlled by a broker community, you almost have to prove yourself to them first, and then you can start to build. So that's generally speaking, that's the way we approached it. And we took down our first 28, and now we're starting to look for more assets in that location, which could be bigger.
Got it. So the current assets under management number is 28 at the moment, or?
No, well, 28 out there. And then locally here, we have another probably another 5. I think it's another 5 units that are locally here, as far as just cash flow properties. So, that's it. So we've got experience with your residential multifamilies, and we've got experience with something a little bit more sizable, where you need to not only understand the physical asset itself, but how to work with a managed company, and how to manage a manager. I think that's very important. Where a lot of people may jump into even just, hey, I want to own a 3-family, and I'm going to hire a property management company to do that for me. I mean, sure, it works, but I don't know if you're going to make any money off of it, because it's only 3 units. And if you're giving so much of the cash flow away to, or the cash flow coming in away to a management company, what are you learning? Like, what are you learning as far as, your repairs and your maintenance and how the building operates when you only have just one small 3-family? Get in and get your hands dirty, and then scale up and understand. When you're working with a manager, you have to understand their contracts and their processes and what they charge and how they charge. And you need to have a little bit more scale, in my opinion, to have a solid manager.
Yeah. Great advice. So again, coming back to the brokers, I think you're having a little bit different conversation with them, because like every time you talk with them is like, oh, do you have something going on? Yeah, we have, 33 units going on. So we go, okay. Yep. So now the conversation is a little bit different than
exactly
where you're starting from zero. So
well, absolutely. And it's just like anything else, right? If you have a broker that is, when they start digging on questions on you, and they say, because they, look, they don't want to waste their time, so when they sit there and say, well, what's your experience? How, it was a little bit easier for me when we started getting into that to say, look, at the time we owned 7 units. We sold off one of the properties a year or so ago. I own 7 units just as small residential stuff, but I've been developing and syndicating larger, development deals, a couple $1 million development deals. It took that explanation to some of these brokers to have the light bulb go off and say, okay, he knows what he's talking. He may not own a large asset or anything like that, but he knows what he's talking about, and he's willing to go down into that 20 to 75 unit area. And you know what? That immediately tells them, look, he knows what he's talking about. He knows where he needs to start. And okay, great. One of the large brokers, like the top broker in a market, they may not get a lot of those 28 unit buildings, because they're off peddling institutional size stuff, 300, 400 units. But it's other maybe junior level associates that are out. They make the calls may come in, but they be the ones to actually be assigned. Just like for them, they're not ready to go take on 300 unit listings. They need to start smaller with the 20s to 50s to 70s. So that's where you start developing your relationships with some of the smaller people. And then as those smaller guys get bigger, as do you. So it works. And you have to be able to convey to the broker community that, like, look, I'm starting, I'm here, and this is what we're doing. This is our goal. We want to build out, let's say we want to build out 150 units of smaller assets before we start taking on 150 unit assets, or 100 to 150 unit door asset sizes. So, and we're okay with that. And, because at the end of the day, that's generally how we want to build our reputation and our experience. And we want to be successful. We don't want to just jump into something and, throw our hands up like, I wish we would have known that. So
Yeah,
that's it. That's
exactly.
how we went about it.
So you also a sponsor in some multifamily properties at the moment, right?
I'm sorry. Say that again. I apologize.
You also a sponsor in some
Yes.
deals as well, yeah?
So so we sponsored our own deal on the multifamily side. So, which was another benefit of going in and starting smaller. And, when you try to jump into, let's say, 150 unit building, and you don't have the liquidity, you don't have the experience, you don't have the net worth, well, you have to bring all of that in on the general partnership team.
Mm-hmm.
And, that's what's going to eat up a lot of your potential profits in a deal. You might find a great deal, but you're going to have to give it all away in order to get the deal done, because the lenders won't lend to you if you don't have the right team in place. So it's a very important piece of multifamily, is making sure you have the right team in place in order to operate the property, because the lenders won't lend to you in that instance. So we were able to sponsor that deal, and we've been looking at a couple of other deals that other people have brought to us, and as a sponsor, and I've reviewed them, and I didn't like the economic profile of them. There's one thing or another I just saw as red flags and said no. So, and that's okay. It's okay not to do a deal. So that's okay. We just continue to build our portfolio, and the opportunities that come to us from there, then we'll evaluate them at that time.
Yeah, definitely. Awesome. So talking about your experience being as a sponsor, I would like to hear your take and maybe some nuggets that help you to raise $9 million of, people's money. So what's the story behind that?
So, I mean, it's a cumulative number. And, it started out with friends and family, and, my first bit of advice to anybody who's going to be raising money is understand markets, all right? Understand investing, and have a financial education as to, what does the stock market provide for returns? What are stocks? What are bonds? Like, know the difference between the two, know the difference between those types of investments. Understand how money works, understand inflation, deflation, understand the Fed policies, those types of things, because all of those, the more you scale into more sophisticated investors, those are the conversations that they like to have. When we started out with friends and family, I think with where most people do, even at that point, we were moving forward with, we figured out how to put a PPM together and how to present an actual investment offering, and putting the numbers together and information about the asset and the market, and how much we think it's going to take for construction, and the timeline, and what we think you could sell them for, and looking at the profit margin that comes out of that, and how much money do we need to cover all of that expense, and out of how much profit we make, how much do we need to give back in order to make the investors happy? So understanding all of those types of metrics and how it works is good, because when you do start working with friends and family, they'll certainly give you a skeptical eye, but for the most part, they'll be a little bit more lenient with you. At least in our scenarios, they were, and we were able to raise the money, and we were performing. So, I mean, we hit our marks. So once you start performing, and you're performing successfully, and being able to say, hey, we generated a 20% annualized return for our investors on this deal. Now we're going to do another one. It's easier to expand that circle. And as you go on and on and on in your business, you just start meeting people, and people ask what you do, and you tell them, like, you are a real estate syndicator, you develop, and at this point now we do multifamily, and we're always looking for opportunities to help others increase their their savings, their investments, their retirement portfolios. So it's that's how it started. And the best times to be raising capital is when you don't need it. So if you need money and you have a deal sitting in front of you, and you don't have capital sources that know what you do, when you go out and try to contact them, you're going to look desperate. And like you'll reek of desperation, and that'll get people to pull back. But if you can engage people and tell them what you do and say, look, I don't have a project right now, but we're always just developing new relationships. When something does come along and this does fit your criteria, would you be interested in having me reach out and letting you know? The answer is always yes, of course. But what you have to realize as a capital raiser as well is the fact that just because somebody may have the ability to invest capital and to invest in your project, you're not the only game in town. So you may come to them in 6 months with the most perfect opportunity, but they may have already invested in something else because they're talking to other people too. So it's a timing thing as well, which is why you always want to be you always want to be raising capital softly with individuals and just saying, look, when something comes up, I'll certainly let you know. And that's why you have to build a deep stable of people to go to. And I think what you end up doing is that you eventually will build up a big enough stable where you can handle a majority of projects that you do. And then as you're doing that and you become more successful, you begin starting to meet and run in different circles as you continue to, well, again, if you are continuing to surround yourself with the right people and you're surrounding yourself with high net worth individuals, you'll learn a lot from them. Like, it's a common saying that you always want to be the stupidest person in the room, right? Because if you're the stupidest person in the room, then you can learn from absolutely everybody else that's in there. And surrounding yourself with achievement and with people who are high earners and have started their own businesses, like there's a lot that you can learn from people like that, or people who own 10,000 units, 5,000 units. There's so much that you can learn from people like that. And you want to create those relationships and develop relationships with those people because, they'll help you compress timeframes. And instead of having to go through it all yourself, you could make a quick phone call and actually understand something that they've already been through multiple times, and they'll help you avoid having to go through that and make better decisions. So those types of people, when you're surrounding yourself with that type of success, they have a different, when people are successful, for the most part, they have a different level of understanding as well. They're going to have more direct questions. They're going to have more of an overall macroeconomic thought. They're going to have more intelligence as far as investments are concerned. So you better be able to answer them intelligently in order to be able to count on them as a potential future investor. So it's when you're just starting out, if you've never raised $1 in your life, I get it. It can be very nerve-wracking. And look, I didn't come from any special background. I grew up, my dad was an electrician and my mom was an administrative assistant. I mean, that was, it was a blue collar family, just north of Boston. And at the end of the day, like I had to personally get over the hump of saying, how can I go out and raise, $1 million for a project? And, I don't even know what it's like to have $1 million in my pocket, So it's like, how do I do that? Like, how do I get money from people that are willing to write me a $250,000 check? So it's getting over that mindset. It's breaking through those barriers and understanding that you are providing a service. You are presenting an opportunity to these people to actually help grow their wealth in ways that they can't do on their own because they're so busy doing whatever it is that makes them their money. So you understand that everybody's in different phases of their lives. Somebody who runs a very successful business may be willing to be more aggressive with their capital because they've got a lot of it and they want it to grow. But somebody who may be retired and on the back nine of their lives may want to just be in something that's just more secure and they don't want to take as much risk. And so understanding those different types of investor profiles and understanding that, understanding risk profiles in your asset and your operating team and the actual amount of time it takes to do something and the overall investment is going to speak differently to different people. So you have to be able to understand that and understand. And then at the end of the day, you just have to be able to understand people and and that's pretty much it. I mean, that's how our capital raising has progressed. And I'd be lying to you if I still said that I don't get a little nervous when I'm going out to raise. I'm confident, but there's always, always get some butterflies. But at the end of the day, I know that it's human beings talking to each other, person to person. And just, if anything, even if you don't raise that capital, you're developing a relationship with that person. You never know where that relationship may come into play. So it's always good just to get out there and always raise money when you don't need it.
That's a super great advice. I love everything that you just said. And I think it's, for people who missed it, I definitely recommend to go back and kind of rewind and rewatch this piece of what you said, because it's very important. Again, what you said about people starting to have these small conversations with people, even though they don't have any assets currently, but just to get used to the, probably, as you said, being, uncomfortable and having these conversations, just perfecting the craft as that. But as you said, it's very important when you talk with these people, you come from a service standpoint, you're looking to solve their problem in the first place. And again, if you combine that with a passion for real estate, I mean, it should come out naturally at some point. So
absolutely.
So this is awesome. I love it.
Yeah, absolutely. And you can also tie that back. You can tie all of everything that you just said, we just discussed on raising capital, back to the personal development piece we discussed earlier. And, it's about having confidence and understanding yourself and being able to, work within your strengths. I mean, one of my strengths is just going out and developing relationships with people. I'm a very social individual. So
I see that.
Yeah. So being able to do that it's within my strength, and I just naturally enjoy talking to people anyways. So, the mere fact that I have the ability to also potentially raise capital, which helps them and it helps me, it's a great bonus, and it works.
Awesome. So again, the last question that I have here for you, again, coming back to kind of the why, and which I'm sure your family is a big part of your why also. And the goals, for your business, for yourself personally, there's a lot of people that I'm talking with, and, some of those people said, oh, I had this amazing business plan for 2020, but it turned out the way it turned out, right? So we just can adapt and improve and, change our approach a little bit. But like, what are you planning to accomplish for upcoming year also? Like, can you talk about your personal and business goals?
Yeah. So, I mean, my business goals for the rest of this year and for 2021 is to expand more into, first and foremost, we're going to expand a little bit more on the business side we want to get a couple more multifamily assets under our belt, and continue to kind of go down that path and help as many people as, have investments into alternative assets rather than leaving it to the whims of the stock market. Educating people on self-directed IRAs and solo 401ks, which it's just like your traditional 401k, but you get to tell the money where to go rather than being pigeonholed into certain products that maybe your company only provides to you. So you can actually take self-directed funds or solo 401k funds and put it into cash flowing real estate assets that are secured, insured, they're real, they're tangible. You can go out, you can touch it and feel it, rather than a paper asset that can lose valuation like that, which in my opinion is probably coming sooner rather than later in the markets. So that's one piece is to continue to grow the cash flow side. And second piece, locally, I mean, we're looking for some cash flow things around here, but we'll continue to kind of explore different opportunities. In our local market. If we can find cash flow, great. But we're looking to scale a little bit more into some larger projects. We have a 6-unit that's going through ZBA right now in Boston. We're looking to get into 10, 20, 25 unit sized buildings. Those are the things that we've started to begin to evaluate more of, and look at those types of opportunities. We're also, I'm also starting a small education business, and we are myself and 2 partners, Willie Mandrell and Leor Rosansky, started a company called Cash Flow Giants, which we do have our own podcast. We've started that up, which I have to circle back with you on, and get you on that as well. So it's so early, but we just started putting out content. And so being able to share what's in our own heads and our experiences and our knowledge with everybody else, people who are, like we talked about, just learning to educate themselves, and they're starting at they're right at the start line saying, okay, well, I just need to know a little bit more about this. Super passionate about helping people. So, and helping people achieve those things. And as I said in the beginning of this call, if there's one thing that I can do to help somebody down their path to either a different life or to more opportunity or to changes within their own lives, like that's incredibly gratifying to me. And so those are some business goals. So more cash flowing assets, looking at larger development projects, and expanding the educational space of what we do.
Yeah.
From a personal perspective, you know, do more self-development just for myself personally and in my relationships. I want to get better at goal setting, period. It's definitely one of those things where working on my clarity of vision is something that I'm personally constantly trying to improve. I'm always trying to just improve myself and improve my spirituality and like how I carry myself with the world and how I am as a dad, and like trying to be more patient with my kids. And but yeah, I mean, everything around my family, because if I can, to balance my time better between work and home, because I know my kids are, they're 10 and 8. They're only going to be 10 and 8 once. Just like 2 years ago, I said they're only going to be 8 and 6 once. So being able to enjoy the process of being a dad and spending more time with my family. So it's a lot. And then obviously, I should say obviously, I've been through coronavirus. Like I got really focused on my habits of, in the morning, every morning. And this is a book all of your listeners should read if they haven't read it already. It's called The Miracle Morning by Hal Elrod.
Mm-hmm.
I did that. I read that book. I read that book actually in 2015, right before I started getting into multifamily. So, and educating myself on multifamily. So it just, and to this day, I still do a lot of those things. I get up I don't look at my phone. It's meditation, it's prayer, it's exercise, and it's reading. Those 4 things are done by 8, 9 a.m. every morning. So, and it just sets me out on the right path. So continuing to improve those systems within my own personal life, and just making sure that I have clarity of vision and that I'm executing on the goals that I want for myself, my business, and my family.
Yeah, those are great goals to have. And again, I'm really, honored to kind of get an insights into your brain and, the way you think and the way you work in a business. Because again, as you said in the beginning, if somebody will take just one piece away from this interview, which I think people can take a lot of pieces, but it's probably going to take for them to rewind and rewatch some parts, because again, this man's mind just going 10,000 miles an hour, and, probably you will need to rewatch some parts, but it's a really valuable, great content. And again, this man is definitely a go-giver. So I definitely recommend for you guys to go and follow him. Again, all the links are going to be down below. So make sure that you get in contact with Andrew and ask, questions about real estate investing. If you want to invest actively, passively, just to have questions about the mindset, breaking through habits. Again, this is a man definitely to get in contact with and to ask these questions, man. I had a great time to do today with you, Andrew. I really appreciate it.
Absolutely, Martinez. Thank you. And again, man, keep up the great work. You're doing a valuable service for all of your listeners and everyone that's out there to help educate them and to help them as well, be able to take those next steps and, making progress by helping others is no better way of earning a living.
Here you go. I'm never good at these closings. Like what
you're good.
What you said right now, it works super well. So I'm just going to ruin it, a little bit. But it's that's what makes the conversation and these interviews great. Is people like yourself, who come in a show and share their knowledge, experience, and how-tos and, everything just gives people insights into how their minds work. Because again, as what we said, it's 80% on the mindset piece is what people are missing. And what you gave today is a lot of great content. So again, guys, I just ask you one thing. If you think this content is valuable, which for me was super great, I'm probably going to rewatch it myself, take a bunch of notes, because it's awesome. Just share it with your friend. If you think somebody will take advantage of this content, of the, Andrew's advice, make sure to pass it along, to a friend. There's a lot of people, again, who are looking to shift and change, when it comes to their professional background. Again, due to COVID right now, a lot of people want to start a business, if it's real estate or, whatever that might be. I think this will be a great answer for those people. So again, Andrew, I appreciate you, spending this quality time with me today.
Oh, thank you.
It's been a true pleasure. And again, guys, make sure to share this episode. And as always, I'm going to see you on the next show.